Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market Site is Michael Sokol. He's the AVP on the Nasdaq Market Intelligence Desk, and we also have Melissa DiDonato, Chairman and CEO of Kyriba. We're here to discuss the potential impact of proposed tariffs and dollar strength and weakness on U.S. businesses and the economy. It is great to have the both of you with us. Welcome to Market Site. Welcome to Trade Talks. And Melissa, we removed that big piece of uncertainty out of the market with a definitive win with the U.S. national election. Now we're all trying to guess what proposed tariffs, how that is going to impact the dollar strength and volatility in the marketplace.
Volatility is forthcoming. There's no doubt about it. When we look back at the last Trump administration, we saw more volatility for the U.S. dollar during that reign of his term than any other time in our history. And in fact, we look forward since he's been elected, we've seen a 3% increase in the value of the dollar against the European currencies. And yet everyone's saying we want suppression. We want to suppress the value of the dollar in his term forthcoming. Now, we just heard yesterday that 25% tariffs are going to be initiated for Canada and Mexico, along with China, an extra 10%. What will that mean? First of all, the big question right now is going to happen, right? Is it the beginning of a negotiation, or are we redlining? Is it definitely happening? Right. And it's 50-50, isn't it? Like, we don't know exactly what's going to happen. However, if you ask me, I think indeed it's going to happen. Now, is it going to be 25%? Is it going to be 10? Something in the middle? I think it's going to happen. And Trump doesn't seem like the type necessarily to give idle threats, as they say. So we're going to see some tariffs. We're going to see them soon. They're going to be definitive, and I think it's going to be less than 25% in my prediction. Now, what kind of effect will that have on currency exchange? What's it going to have the impact on the strength and weaknesses of the dollar? When decisions are made like that, it tends to increase the value of the dollar rather than to suppress, which is kind of what Trump and the economy is after. So we think that there's going to be, for sure, a tariff. It's going to be definitive. It's going to be immediate, and it will have an impact in the value of the dollar. And we're hoping that it's going to soften the value going forward, because when we look at the supply chain, particularly of domestic supply chain business, it's going to be valuable for us as an economy, for sure. We look at the Mag 7 or anyone exporting any kind of value or software or, well, anything really outside of the U.S., it's going to be valuable. So I think that tariffs will come. They probably maybe won't be 25%, but they will come. They will impact the value of the dollar, and hopefully it will suppress the value in the short term, so it has a better impact on the economy.
Yeah, well, of course, and Michael, that really is the key here too, because we're also questioning how are these costs going to be passed down, right? And the thought here is that it could get passed down to the consumer. That is a concern for the economy because it's performed quite well, despite all of the uncertainty that has been in the market, whether you're thinking of geopolitics, the national election, or just the wall of worry that the market climbs at any given day.
Yeah, the market's been remarkably strong. You're looking at 2.8% GDP, you got 15% earnings growth baked in for the S&P 500, which is trading near record at 6,000, and it's absorbed many, many different things that would be considered, potential threats to the market. And even with the news of the tariffs, it's managed to power through. And then you put on top of that the rotation into small cap companies, some of which could be impacted more than others in terms of, you have the cross currents, the deregulation that everyone's expecting, but then you also have the tariff impacts. And how do you disentangle that all from each of these companies specifically, and then each of these sectors? Yeah,
and that's really, right now it's just conjecture. And to your point earlier, I don't think it's necessarily idle threats, but perhaps it is a starting point for negotiation. And of course, what's said on the campaign trail, and again, the administration hasn't transitioned yet, and then you still have the first, 100 days that you're benchmarked against. So as an investor, are you moving things around in anticipation of this, or will things continue to play out with business as usual? Because to Michael's point, the economy's been strong. Earnings were quite good. I mean, look at the Mag 7 NVIDIA. What was it, up 100% year over year in terms of earnings? So companies have weathered a volatile environment quite well, with the exception of different pockets in the market. So I guess the question is, with this, the dollar strengthening, how does that impact businesses, and what businesses could be impacted the most?
So I think a couple of things are happening in a very volatile market like we're experiencing right now. We all have to be concerned about the value of the dollar when you have an import nation, right? So Canada and Mexico, the U.S. is the #1 country which they export to us. So if we need to consume more, retail is going to be impacted hugely, right? I mean, it's going to have a really, profound impact on things like retail, because the cost of imports is going to be for us very high. It will be passed down to the consumer, for sure. We're going to face all of it, right? I mean, the flip side of all of this is that as U.S. businesses continue in their supply chain to export, as we said earlier, it's going to have a net positive impact on the economy. But I think the one thing that we really need to look down, down the eye of is what's going to happen with the M&A market. Like, we look back at the height of 2021. In the height of 2021, we had $3.5 trillion, give or take, of corporate liquidity floating around the market with thousands of M&A transactions, a huge consolidation of the market because the market was strong, right? Going back to your earlier point, the market was strong. Okay, now fast forward, we have about the same, give or take, corporate liquidity, and yet we have thousands of fewer transactions happening. So what's going to happen in 2025? Big question for me is the M&A market. Are we going to see consolidation? Are we going to see more activity? What's happening with private equity? I mean, we just announced here at Kariba, made news, General Atlantic, big minority investor for us last month, October. Big transformational deal, and guess what, Eureka, we had a lot of inbound because we have to start putting this capital to work.
Right.
And that's the big question. When you look at Forex, exchange, volatility, interest rates, inflation, the big question is how do I deploy my capital, and looking at a best practice benchmark of 20% of revenue into liquidity. Where do I put it? How do I put it? How do I reduce my risk? One area we're going to see a lot of momentum, my call in early 2025 is going to be M&A.
Yeah, I mean, certainly, but you have to put your money to work, to your point.
Of
I mean,
course
there
you do.
are deals where, partners have to get out of and deploy their cash elsewhere. And we've even seen it now. We know, the IPO market has been relatively muted, but it's really in the secondary market where you're seeing that kind of activity. And of course, yes, removing the uncertainty of the election, there was a concession there. We're moving forward. Some, from a social perspective, that volatility has been removed from the market as well, knowing that we do have a result. So, the expectation is the pipeline is there.
It's building.
It's there,
yeah.
but we also know the strength that we're seeing within the private markets. And of course, there's demand for that kind of product as well as people look for alternatives. So the market's going to create these products where the demand is. So I think just by, the virtue of that uncertainty removed and the fact that capital has to be redeemed and deployed provides a natural backstop or support, if
Absolutely
you will.
right.
Yeah,
Absolutely.
but I think it's more so the private and alternative spaces where that pipeline might look a little bit more attractive.
Where we're going to see it, definitely in tech. I think you see a lot of opportunity for tech. I mean, you can see it from the Mag 7, but obviously they're much bigger, less reduced risk, high margin, high growth rates, well above what we've seen before. I think it could be the mid cap. The mid cap business is going to be very greatly impacted. You can see retail, mid cap. They're going to have the most volatility and risk associated with the next year, for sure.
Yeah, but Michael, that risk could also be to the upside as well, because we've had a number of managers on the show talking about not just from a valuation perspective, but some of the key themes that Melissa's been talking about, where there is potential there, particularly in the mid cap space.
Yeah, mid cap as a group hasn't had earnings in 9 quarters. Small cap, it's been 8, and so small caps are about to have earnings growth for the first time next quarter. I think it's about 6%. But at the same time, people are anticipating, due to the deregulation and some of the other growth factors in the marketplace, that small caps and mid caps are going to do better. So, for example, the Russell 2000 index was nowhere near its November 2021 high. It was as recently as October, the end of October. They were about 30% away, and they climbed all the way back to just about where their highs were. So there's a lot of positivity baked into the small cap performance lately. But to the point about passing along costs to the consumers, if companies can't do that and the margins suffer, then that's where there's going to be a problem, because the market is priced, I don't want to say for perfection, but the valuations are kind of stretched. So if things don't work out just exactly how people want, that's a potential risk.
Right. Well, I mean, we've seen that in the small caps, Michael, for I mean, how many quarters now where there's fits and starts, right? It'll have a 3 or 4 day, uptrend, if you will, and a 3 or 4 day trend is not a market make, but they get off the starting line and then peter out.
Well, Willie Sutton, right? He robbed the banks because that's where the money is, and it's the same kind of thing. The Mag 7 is not only your large cap haven stocks, but it's also the AI overlay on top of that. And for a long time now, and we all well know this, that's where all the earnings has come from. Yeah. So we want to see if that can broaden out. If you have a very strong economy in 2025, you're hopeful that the small and mid caps can now start to participate. And some of that's baked into the estimates. That's the expectation.
Right. I mean, imagine if we did not have that generative AI story, which, by the way, is 2 years old now, November 2022. Yeah. If that was not part of the market narrative, who knows, where we would be in terms of levels in the indexes and multiples. And I mean, that really was the story, and was also the derivative stories for, the other sectors that have exposure to it in terms of, let's think about energy demand or, other products and services. I mean, AI is attached to everything.
Think of utilities.
Right.
how they've done.
Like the,
as
the
a
top
growth story,
sector
as a
in a
growth
few of the
story,
months.
yes.
I mean, you don't typically see that.
Yeah, but AI is also, it's really hard to commoditize. I mean, everyone's
Right.
got an AI story. Every software company in the industry today, I mean, whether it's enterprise or startup, everyone's got an AI story. How do you commoditize AI?
The data is the commodity.
Exactly. I mean, we talk about two separate things. You can't have the AI story without the data.
Right.
But the data being disparate, and the data being gridlocked across multiple systems all over the place, you could still overlay the AI story. But to commoditize the value of AI is still a big TBD in 2025, for sure. I mean, you look at Salesforce, they got a great opportunity with Agentforce, and they're commoditizing Agentforce. But very, very few tech businesses have gotten it right. And that will be the defining moment for us, particularly in technology, is how do you take AI as a commodity to be able to actually increase your margin, increase your growth, as a result of the AI technology that you deliver, or how you embed it in a product, a good, a service, whatever it may be.
Yeah, I mean, think about Kariba as an example, 3,000 customers in 170 countries.
Correct.
I mean, you know, data's your...
Data's king. I mean, it used to be cash is king. It still is cash is king, by the way, as,
Right.
as a liquidity performance tool. But absolutely, data is king. And the insights required to make business decisions now are going to be driven off of AI insights, macro, geopolitical. It's all going to be the conglomerate, if you will, of all of this data compiled to make better business decisions. But it's going to be driving. It's the tail that wags the dog, for sure.
Right, and that's what you're doing at Kariba, right? You work with treasurers and CFOs to help them manage their cash positions and their working capital and investments and credit.
Forex, do we bet big on the dollar? Do we keep our liquidity in the US or do we keep our liquidity in France or another place?
Right.
So managing, hedging against all of the risk in conjunction with making your liquidity perform for you, because you don't want to have that best practice of 20% of your revenue sitting in cash that's not performing for you. And the risk associated with where that capital sits, how you deploy it, where you deploy it. I mean, do we utilize it as M&A? Do we use, in what way? That drives CEO and board decisions. That'll be very, very transformational in a highly volatile environment like next year.
And is that how you're seeing AI or other data-derived products within your space helping to make those predictive, more quantifiable
Exactly.
decisions?
All the KPIs for next year that we use to deliver decisions and insights are going to be actionable insights based on AI delivered against what the market data is. So it's taking historical data, current data, competitive data, and being able to present some insights to make decisions, 100%.
Right, so it seems to me like the arms race, if you will, or the commodity in today's digital economy or economy overall, it's about data and the quality of it.
All starts with data, 100%.
Right, it definitely does. But I want to go.
There is no AI strategy without a data strategy. That is the moral of the
Well,
story.
I mean, and the other thing is too, data begets products, right? You can't develop products leveraging these emerging technologies unless you have the data to support those decisions at the top, to your point, or to even execute on it from an engineering and developer perspective.
That's right.
Right. I did want to go back to the negotiation of tariffs for a moment here, because Michael, actually you brought up a point before how we are the #1 consumption country here in the U.S. I mean, that has to be the trump card, if you will. I mean, that's our biggest negotiating point right there. I mean, I guess that could be used as a positive in terms of leveraging those negotiations, because again, the consumer and its contribution to our GDP is really going to be key here.
Well, can we consume it, as Michael said, right?
I have no doubt Americans can find ways to consume.
Particularly Black Friday is coming up on Friday this week, isn't it? But I mean, that really is the big question. Can we consume the impact of the tariffs as a consumer to be able to substantiate an increased volume of sales to get to better margin?
Yeah.
That's the big question.
Yeah.
And there's a trade-off, right? Do you, in trying to get a stronger manufacturing base, are you willing to pay more for your products? And where is the right answer in there? And I don't know that we're going to just do this live without a net and see what happens.
Well, I mean, the whole thing is too, when you think about inflation, you're certainly going to have wage inflation if you start to onshore this as well, which is a big component into the data that certainly the Fed uses to help guide their monetary policy. But I would say at the end of the day, and Mike, we've spoken about this before on the mid-panels, I feel like it's almost fiscal policy more so than Fed policy that is the bigger concern. We have a lot of debt to service, and it's an unsustainable trajectory.
You took the words out of my mouth. There's only so much you can cut, first of all, in the budget, but also if you look at the 10-year, I mean, the stock market's at all-time highs. The 10-year has been kind of flashing warnings. It got to about 4.5%, and from mid-September was at 3.6, so that was a pretty steep rise. And so the bond market is seeing a little bit of inflation coming, and you can tell from the projections about where rate cuts are going to go. The steepness, if you will, of the rate cuts has leveled off, which could be a problem for small caps with the financing costs. But what you're looking at is where is the balance? Where are rates going to land? Because you have this mountain of debt that's got to be financed for years and years and years, and no really seems ready to cut any costs.
Yeah, I mean,
basically.
making that decision to cut entitlements or raise taxes, nobody wants to have to make.
No, I don't want to have that decision.
I don't
do
have to
you?
make
No.
that decision either. All right, well, I guess we'll see, how this turns out in the next 100 days of the administration once I get rolling there. Appreciate both of your insights. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.